All right, so now is the favorite time in my show where I get to learn a whole lot of stuff with the guest expert that we've got on. Today's guest expert is a friend of mine. And we catch up with each other at least every fortnight, I think, if not more often. And that's Kevin Hargraves. So Kevin is a business owner. He's been in business for years and years and years. And one of his hobbies, I suppose you'd call it, is to find broken businesses and buy them, fix them up, and sell them for a profit. So he's done that for a number of businesses, and he just seems to have this knack of being able to look at a business, find out where things are going wrong, and being able to fix them quickly, or sometimes not quickly, but being able to fix them and turn them, sometimes loss-making businesses into highly profitable businesses. I happen to know some of the people that Kevin has worked with as well, and I've never seen anyone go from normal business misery to having a massive smile on his face and really enjoying life as well too. So Kevin's one of those people that he may not look happy himself, but he certainly brings joy into other people's into other people's businesses and into their lives as well too. So I don't know, he might be the happy coach, who knows, but he certainly knows his stuff. So a bit of background about him. As I say, he's been in business for about 40 years, and he studied under, anyone remember a chap by the name of Michael Gerber? So if you've read his book is The E-Myth, and he's written a number of books as well too. He's been a student of Michael Gerber's, and he's also written 5 books himself as well too. And one of them ended up on Amazon as a bestseller. And I know that we're probably going to get some reviews from for the books for Kevin tonight from the chap that bought them this week, from Joe that bought them this week. So Kevin now coaches business owners on how to grow their businesses exponentially, and he's here to talk to us tonight about unlocking those hidden profits and some of those numbers that will revolutionize your business. So put your hands together and let's welcome Kevin to the stage. Welcome, Kevin.
Hello. Hello, everybody, and welcome. I'm sure you're going to learn some interesting things tonight. When I talk to business owners and I talk to them about their profit and loss, they really get a bit lost. I think they get their profit and loss and they look at it and go, made some money, that's okay, and they throw it in the bin. Not in the bin, but they file it deep. But you know what? Of all the businesses I've bought over the years, I learned that the profit and loss was the one thing I needed before I did anything, because when I could go through that profit and loss, I could see if I could improve that business really quickly. So I'm going to share some of those things with you tonight. I'm sure you'll find it interesting. I work with any sort of business because the same rules I find work in every business. There's some variations, but in reality, the same rules always work. So that's what I do. So I'm going to share my screen in a minute and we're going to go through some interesting things. And I hope you all enjoy it. I'll ask you some questions as we go. Just type them in the chat box. And I'll just get you to type in 1 if you agree or 2 if you disagree, whatever. How's that sound? All right. Let's see if we can get this working. There I am. Look at that. So this is about know your numbers, know your business. If you don't know the numbers in your business, you've got no idea where you're going. That's the book I wrote up there in the top left, How to Create Your $1 Million Business Using 7 Explosive Strategies. That was an international bestseller. I've also written a book on this, is Know Your Numbers, and how to find the hidden profits in your financial statements. And this is an interview I did for Small Business Breakthrough. So let's have a look what we're going to do today. I think Nick's given you much of my background, not all of it, but a little bit. Can't tell you everything, you know that. Let's see if we can get this to move on. It doesn't want to move. There it is. It's working. So what we're going to cover today is there's only 3 numbers in your profit and loss statement that you can have a direct impact on as a business owner. Who knew that? So I'm also going to cover the 3 simple numbers that will increase your profit by 58%. Not only that, but you can do that this week. All right, that's pretty good. 12 ways to instantly lower your overhead costs, 6 ways to lower your cost of goods, 8 options for increasing the revenue in any business. And remember, knowledge equals profit. So this is a simple profit and loss statement. I've simplified it. Revenue or sales, some people call it income, cost of goods, which is obviously what it costs you for whatever you sell. Gross profit is the difference between your sales and your cost of goods. Gross profit percentage margin is the percentage, which is your gross profit divided by your revenue multiplied by 100. And overhead or expenses, which is normally probably got another dozen things on it, but we've just simplified it for today. And then we've got net profit margin. So let's go on. So here I've already explained some of this. Gross revenue is that. Variables, which is your cost of goods, can be variable because it'll depend on how much you sell. The more you sell, the more cost of goods you're obviously going to acquire. Gross profit is the sales minus the cost of goods. Gross profit margin is your gross profit divided by your revenue multiplied by 100. And overheads are fixed costs. So these are costs that happen every month, whether you sell more or you don't. They're like your rent, your labour, your internet, your telephone, etc. Net profit is obviously your gross profit minus your costs, and gross profit percentage margin is all there. So let's ask you. There's only 3 of these numbers that can have a direct impact on as a business owner. So who'd like to have a guess of what they are? Type it in the chat. I'm happy to. No one. Okay. Well, I'm going to tell you, the first one is your revenue. If you increase that, you can have a direct impact on that, and there's a lot of different ways, and I'm going to show you as we go through how you can do that. Cost of goods is the other one. So you can reduce or increase the cost of goods because both of those affect the gross profit. So the gross profit depends on the other two. So the gross profit you can't have a direct impact on. Gross profit margin percentage, you can't have a direct impact on because it's always going to be a percentage of those two. The third one is your overhead and expenses. You can obviously have a direct impact on that, and it then affects your bottom line and your net profit margin. So let's have a look what we can do with that, all right? Get this thing to go sometimes. Here we go. So here's a typical little profit and loss. So it's revenue of this business is $500,000. I've done this for a year. Profit and loss can be any time. It can be a month, 3 months, 6 months, 12 months, whatever. We're just going to do it on a yearly basis for this business. So this business could be a cafe or restaurant. It could be a jeweler. It could be a florist. It could be a supermarket down the road. It could be almost any type of business. If it's a business that's involved in just services like what I do, coaching, or what Nick does, cost of goods will be very low. However, the other costs go up and it doesn't change as much as what people think. So let's have a look. So I want to apply my 555 formula. So let's have a look at the revenue. It's $500,000. Who thinks we could reduce that? Oh, whoops, sorry. Who thinks we could increase that by 5%? If you think we could, put 1 in the chat box for me. Nobody's here. Everyone thinks we can. Well, some do. Nick does. Mando. Armando. Sorry about that. Yep. Okay. So I'm going to show you that. So what about the cost of goods? Who thinks we could reduce the cost of goods by 5%? 5%. That's not a lot. Easy. Look at that. Easy. 1, 1, 1. Very good. Yep. I'm going to show you in a minute what happens when we do that. And what about the overhead? You see I've got these 3 numbers highlighted in maroon colour. Who thinks we could reduce the overheads by 5%? Remember, that's the rent, the telephone, the business insurance, the staff wages, etc. Yep. So, all right, let's have a look what happens when we do that. So have a look at this. Here's a profit and loss. We're increasing the revenue by 5%, lowering the cost of goods and the overheads by 5%. So the revenue is 500,000. We add 5% and we got 525,000. You all agree with that? 5% of 500 is 25,000, so it makes it 525. Cost of goods, excuse me, is 300,000. We take 5% off. 5% of 300 is 15,000, so that makes it 285. Now have a look at what it does to the gross profit. It takes from 200 to 240,000. Pretty amazing. And look at the gross profit percentage margin. It takes from 40 to 46%. Have a look at the overhead when we reduce it by 5%. We go from 120, 5% of that is 6,000. So we go down to 114,000. So let's look at what it does to the net profit. Remember the net profits, what's left in your bag, it's what you put in your pocket at the end of the year. Is that coming up? No, there it is. So it goes by 46, that increases by $46,000 profit. That's a 58% profit increase. Now, most business owners would kill to get that, don't you think? How easy would that be for you to do? You could go home and implement that all next week. However, when you work with me, we get a lot more than 5%, believe you me, and I'm going to show you some of the ways we can do it. So let's start. PowerPoint doesn't like this Zoom call for some reason. Okay, so let's look at overheads and fixed costs. So these are costs that incur regardless whether you make a sale or you don't. They just happen every month. So they're like the mortgage, the rent, the insurance, your utilities, office supplies, office salaries, general maintenance, advertising, your cleaner, automotive expenses. Fixed refers to the fact that the cost always reoccur every month. Typically remains constant despite sales volume. So the cost incurred to deliver what you sell, that's the cost of goods. Remember where that's their second one? Well, that's the middle one we looked at. The expenses was the third one, but I'm just doing it back to front and I've got a reason to show you that. So these are the costs incurred to deliver what you sell. So typically increases with sales volume. So as the more you sell, the higher your cost of goods are normally going to go. So examples of cost of goods: labour, direct and contractual, materials, scrap and rework, packaging, distribution, shipping, commissions to salespeople, and the other one is purchases. So you might purchase things to sell. It depends on your business. I haven't put that in here, but purchases are important. That's another one. So they can increase the total amount of sales or income for a reporting period prior to any deductions. That's your revenue. So I'm just doing an overview here for a bit. So this is a figure that indicates your ability for your business to sell goods and make sales, but it's not the ability to generate profit. I see businesses that have really great sales, but they don't make any money. Not good. So let's discuss how to lower our overheads. That's the first one we're going to cover, okay? So let's audit our current suppliers and vendors. It could be products and services, internet, telephone, office supplies, janitorial services, insurance, garbage pickup, repairs and maintenance. Done it again. Okay. Cancel unnecessary dues and subscriptions. You know, I go to businesses, I look at their banks, at their credit card statement, and sometimes they got 2 or 3. And when I go through them, the numbers of subscriptions that are on there that they pay for every month, never query, and they never use. Get rid of them. Eliminate overtime if possible. Sometimes you just got to readjust the time schedules of your staff. In fact, I'm working with a restaurant at the moment, and I'll probably talk about it a little bit today. I just saved them $2,000 a week on their wages. They had quiet times of the day, say between 10:30 and 12, and between 2:30 and 5. Had 2 people in front of house, which is like the wait staff, hanging around doing nothing. So we cut them back, and you know what? Over 7 days, it amounts to a lot of money. $2,000 a week. That's $100,000 a year. I just saved them. Refinancing debt. Now, this is not so easy at the moment, and the reason is because of interest rates keep going up. However, you can do it. Replace travel with video conferencing. Saves time. Set up results-based compensation model. where you pay people on a results-based efforts. Lease versus own. I get asked this all the time. Will I lease it or will I buy it? Here's the rule. If it appreciates, you buy it. So if it's an office you want, or if it's
Are you going to cook? I'm just going to boil some water. Okay.
So if it's an office or a factory, you would buy it, because what you're going to pay it off at will probably be no more than the rent, and eventually you'll own it. If it depreciates, lease it. So if it's a car, a computer, lease it. A leased computer you can constantly upgrade forever. So that's another way to save some money. Investigate outsourcing or in-house services. Accounting, bookkeeping. Accountants don't like me to say this, but it's true. Maintenance and repair, contractor versus employee. So you can save salary often with a full-time VA from the Philippines or other countries as well. For probably, you can get one for probably $500 a month. The same type of person in Australia would probably cost you $5,000 a month. It's a good saving. So here's the rule. If it's an expense and it doesn't help you acquire a new customer, or it doesn't help you look after the one you already have, dump it. Dump it. Let's move on to lowering cost of goods. So before we discuss ways to lower cost of goods, excuse me, let's examine some of the factors that affect the cost of goods. Misunderstood pricing all the time. Discounting, bad. Supplier price increases, and I'm not going to cover this further, I will the others, but so when a supplier puts up the price, and say they put it up 10%, this is what happens. Half the time the business owner doesn't realise they put it up 10% because they don't send out a message, they just put it up. So you need to find it first, and then you need to put your price up to match it. So if your supplier puts the price up 10%, you put yours up 10%? No. You got to put it up 10% plus your margin on that 10%. So that means if your margin's 40%, you got to put it up 10% plus your margin 40%. Otherwise, your gross profit margin is going to fall down the toilet. Warranty and return. So this gets back to productivity and quality control. See, so much of it, we're just people are slack, they don't have proper procedures in place, and they just lose a lot of money. Scrap and waste. Let me talk about scrap and waste. Waste. So I'm working with this restaurant again at the moment, and this is more inventory, I suppose. But let's go. So what they did, they had a standard order for milk. They used to get 60 crates of milk every week. Standard order. Every week they'd throw 15 to 20 crates away because they were out of date. But they still kept doing it. How do you do that? So we've just saved them a heap of money there. The other thing they did was their aprons. They used to have 180 aprons ordered as a standard order every week. They were flat out using 25 to 30. Just waste. And you just wonder how they don't realise, but stuff I found. Excess inventory is another thing. I worked with an automotive business not that long ago. He had all this inventory stock on his shelf, like oil filters and air cleaner filters and all sorts of spark plugs and what do they call them today? Those other, it doesn't matter. But all this stuff on his, but you know what, a card come in and they want the same things he's got on the shelf, he'd just go and order them again. Like, just crazy. Money just sitting there, not making you any money. Misunderstood pricing is another thing. So say you're going to sell a widget, it costs you $100 for the material and $75 for the labour. That's $175 cost of goods. You all agree with that? Cool. So the client wants to make 35% on each one he sells. So the price is $175. He multiplies by 1.35. That's 35%, right? He gets $236.25. Is that correct? If you think it's right, put 1 in the chat box for me. If you think it's wrong, put 2. Everyone's left. one's here. Okay, so let's have a look. It's wrong. And why is it wrong? Because here, you must use the inverse to calculate the proper retail price. So if it's $175, you've got to divide it by 0.65. You see that? 0.65 by 0.35 make up 1. $269.23. So if you did it the first way, you just lost $33 on every widget you sold. Great way to lose money. What about discounting? Who thinks discounting is a great way to get more sales? If you think it is, put 1 in the chat box. If you think it's not a good idea, put 2. Oh, lots of 2s. Good book. Well done. Look, and I'm going to show you why. And this is what people just don't understand. So we're going to get that. We got that same widget. All right. We're going to sell it for $100, and we're going to discount it 10% and sell it for just $90 instead of $100. So your cost of goods still remains at $70, right? Well, I didn't tell you that to start with, but it does. So it was originally $70. We're going to sell it for $100. We're going to discount it to 10% to $90 instead of $100, but it still costs $70. So now we're making only $20 profit instead of $30. You realize that's a 50% drop in your net profit? So you now have to sell 50% more widgets just to get back your original profit margin. Have a look here, you'll see what I mean. So you sell 100 widgets at $30 to make $3,000. That's our original price, $30 profit. Now you have to sell 150 widgets at $20 to make $3,000. Now just think about that for a minute. For a measly 10% discount, you now have to sell 50% more just to break even. What a great sales process. When was the last time you saw someone only offer a 10% discount? Normally they're offering 25 to 40% discounts and wonder why the hell they're going broke. Okay, some additional factors to consider that impact the cost of goods. How am I going for time, Nick? All right. Warranty and returns. So increases in material and labour. So this happens usually through bad productivity, bad quality control, and people lose a lot of money. Now this scrap and waste, which I told you about before. The other thing with that restaurant with the waste is they used to buy this steak in this great big piece, and they'd try and cut it into 300 gram and 100 gram pieces. Sometimes the 300s would be 350, the 100s would be 80 or 120, and they just used to have so much waste. So what we found is we could buy it cut to size at a less kilo rate than what they were paying for it in bulk. How about that? Did we save them some money there? In fact, with this restaurant, with their wages, we saved them just over $2,000 a week, and with their waste, we've saved them just over $2,000 a week. That's 200 grand. It's not a bad saving for the one business in about a month I've been there. So excess inventory, which is just ties up funds, which is what I said before about the auto guy. He had all this stock on the shelf and kept buying in the same stuff. It just doesn't make sense, but it happens. It just happens. You need to be aware of it. So a combination of all these factors could easily lead to a 10% increase in cost of goods. Now, remember, we're only looking to reduce cost of goods by 5%. But with that restaurant, I've reduced their cost of goods by something like 40%. 40%. Amazing. All right. What about revenue? Now, most businesses I talk to, when I first talk to them, they want to increase their revenue. They want more sales and want more customers. Is that really the key? Let's have a look. 6 ways to increase your revenue. What about increase your prices? It's the simplest, most easiest way to increase your revenue and your profit. Every dollar you increase your price goes into your pocket. It's your bottom line profit. So if you put your price up 20%, and say it was a widget for $100 and you put it up 20%, that's $20. That $20 is net profit in your bank, costs you no more to produce it, sell it, or anything. It's the greatest way. In fact, I recently worked with Sean and Tanya from Gold Coast Budget Plumbing, and we put their prices up 40%. They said it won't work. I said, watch, it'll work. They never lost a sale. In fact, they actually increased their number of sales and made more money. Sold more stuff. Well, there's lots of ways to do that. You can just have more product. I'll cover that more in a little bit. What about reignite old clients? Sean and Tanya with the plumbing business, they had about 3,500 clients on their database. I said, what do you guys do with these clients? They said, what do you mean? I said, what do you do with the clients? They said, well, nothing. I said, well, you realize that there's gold in there? You know that it costs 5 times as much to get a new client as it does to sell the one that you already got? Hear what I just said? So what we did is we set up an email marketing program for them with a CRM, and we sent out information every week on the different things they did. Because here's what happens with a plumber. It happens with nearly everything, but with a plumber, customer comes, he's got a blocked drain. They go and fix the blocked drain, away they go. They probably leave them a card, but you know what the card's got doesn't have everything they do. It's impossible to fit it all on there. So they, so that's it. So 6 months later, their hot water system goes. Well, what does the customer do? He doesn't think to ring Gold Coast Budget Plumbing. He goes to Google, types in hot water system, and he finds someone else. However, if his client already knew that they did hot water systems, who do you think they're going to ring? They're not even going to go to Google. This works terrific. In fact, I can usually increase most businesses, if they've got a good database, by anywhere to 30 to 40% just with that. Upsell and cross-sell. So, you know, upsell, we all know what upsell and cross-sell. You know, when you walk into McDonald's, the kid says, you know, would you like your meal supersized? That's an upsell. And then when he says, would you like an apple pie to go with your supersized meal? Well, that's a cross-sell. And it works in everything. In fact, I'll tell you something about McDonald's. Do you realize in 2021, during COVID, do you want fries with that created $1 billion, listen to this number, $1 billion in profit, not sales, for McDonald's. And admittedly, that's worldwide, but that's an amazing number. So it works really good. Joint venture partners. I'm not going to go into this a lot, but joint venture partners work really good. You just have to find the right sort of person. So it's another business that has the same type of client that need and want what you sell, but they're not your competitor. Works both ways, and it's a great way to grow your business. Introduce more products or services. So what do I mean? So say you're a landscaper and you do gardens and mowing and whatever, hedge trimming and stuff. What if you went into pool cleaning and pool fences? Going to grow your business. And you already got the clients, because the clients who use you for the mowing and stuff will have the pool. It's a great way. Trade shows. These work really good for a lot of businesses, not everything. I used to run 4 different Pettis suspension stores at one time, and trade shows were amazing. We could do $30,000 to $40,000 in a 2-day trade show. Amazing. Strategic marketing. This one I love. Takes time and money. And everything I've showed you today, you didn't need any marketing. But let's have a look at marketing, because when I go to business owners, they always want more customers and more revenue, and they think that marketing's the way. They spend money on marketing, but what happens is, I'm going good for time. What happens is they spend money on marketing and they do get sales from it, but they don't get enough to cover their costs. So it's wasted, and they think marketing doesn't work. That's not true. I'm going to cover this first. I've got the slides out of date. Doesn't matter. So small businesses have never considered raising their price. We spoke about prices before. I just want to quickly show you this. Most businesses are scared to death to raise their price, no matter how small. They fear that they're going to get a mass exodus of their customers. But is that really true? Well, let's have a look. Let's say you sell a widget for $100 and it costs $70, the same widget we had before. So we decide to increase the price by 10% to $110. Will that small increase really lead to a loss of customers? I don't think so. The business is now making an additional $10 profit on every one he sells. That's a 33% profit increase. So for this business to make $1,000 in profit selling their widget at $100 each, they would need to sell 33.3 widgets at $30. You agree with that? Cool. But by increasing the price 10%, they now only need to sell 25 widgets because we're now getting $40 profit per widget. So that's 25 by 40 is $1,000. So that means just to break even, this business could lose 25% of its customers over a measly 10% price increase. Simply is not going to happen. It's the easiest thing to do is raise your price. Okay, so let's go back to our marketing. Now, remember when we worked before with our 5-5-5 formula, the 5% increases and decreases in the three numbers on your profit and loss? We increased the revenue by $46,000, right? So let's work out how much we'd have to spend on marketing to create the same sort of profit. So at 40% GP means that for every dollar in sales, you only get 40 cents profit, correct? So that's $46,000. You divide it by 0.4, which is a profit margin, equals $115,000. So to generate a $46,000 profit increase with marketing, you would have to get an extra $115,000 in sales. And remember, that was on $500,000 revenue, so that's around about 22% increase in sales. That's a fair bit. And there we go. So that's what we'd have to do. 115,000 we'd have to get an extra sales to get our 46% profit. So to generate that marketing, you would need to increase your revenue by 115,000. I've got it there twice, and that assumes that your marketing program is for free. And I don't know where you get marketing for free. If anyone knows, please tell me. So marketing is not always the answer. Most businesses immediately turn to marketing as a primary way to quickly increase their revenue and profits. In most cases, marketing takes time to generate meaningful results, and therefore is typically a cost involved when executing a marketing program. It costs money. However, in saying all that, I'm an absolute believer of marketing. The trouble with marketing is it needs to be the right marketing. Most people market like their competitor. They need to market different. They need to create their point of difference, what I call a market dominating position. Set your business apart from your competitor and it will work 10 times better. However, if you're a new business, you absolutely need marketing because you can have the best product or service in the world, but if no one knows about it, you're never going to sell it. In my book, the international bestseller, How to Create Your $1 Million Business, I say in there the chapter is called Marketing is the Key to Your Success. But when you do the marketing and get it right, and you get all these other things happening right, your business will grow exponentially. I'm happy to answer any questions, but just make them easy because I don't like hard ones. I'll stop the share and I'll come back and talk to you.